John Palmy of the Actionable Intelligence Alert. Today is Wednesday, July 20th, 2016. And today I wanted to discuss a recent article that I just had published on Seeking Alpha entitled Mongolia Growth Group, The Way to Play Mongolian Economic Recovery. Now, Mongolia Growth Group is a Canadian company listed on the Toronto Stock Exchange. Its primary business is the ownership, leasing, and renting of office space and high street retail in Ulaanbaatar, Mongolia. And the reason why I like this company is because of the rebound that I see happening in the Mongolian economy. Now, the economy in Mongolia has been in recession for about 4 or 5 years, due primarily to the collapse in the commodity prices that Mongolia exports, primarily coal and copper, along with the slowdown in economic growth in China. In addition to that, another issue of why the economy in Mongolia has slowed down or has issues is because some of the policies that were pursued by the Mongolian government back in 2010, 2011. In 2011, there was a company in Mongolia called South Gobi Resources. It was a coal company, and the Chinese aluminum company made a unsolicited bid to buy the company. Now, has been historically quite a bit of animosity and mistrust of China by the Mongolians. So, in a fit of nationalism, economic nationalism, the parliament in Mongolia passed legislation banning the purchase of this property, South Gobi Resources, which was a coal mine, by the Chinese aluminum company. Now, this reverberated through the markets. It sent shockwaves through the markets, and the unfortunate thing is that basically the Mongolian economy was relying quite a bit on foreign direct investment into the country. Now, if you're going to pass legislation barring companies from investing in your country, that's going to make other people wake up and sit up and say, hey, if they're going to ban the Chinese, they'll probably ban us. So you were in a situation where you already had the commodity markets going down, Chinese growth slowing down, and then the government passing this dumb legislation to stop the acquisition of this coal mine, which ended up getting in trouble and having a bunch of difficulties anyways. So subsequent to that, the government in Mongolia realized what the error that they made, but once you tear down a brick wall of trust, it takes a long time to build it back up. So they got a new prime minister in there. The government began trying to change its ways, but it was kind of a too little too late type situation. So recently, I think those two headwinds, I think we're now going to see turn into tailwinds, and I think that there's change coming, and this should benefit Mongolia Growth Group. In fact, I think that the 4 to 5 year bear market in commodities is coming to an end if it's not at an end. I mean, I think this is based on several things, just the fact that bear markets don't last forever. After 4 or 5 years, prices were down so much for many commodities that supply has been taken offline. So I think that we're starting to see the beginnings of a reemergence of a commodity bull cycle, if you will. In addition to that, the Mongolians recently held parliamentary elections at the end of June, and the opposition party, the Mongolia People's Party, won an overwhelming majority in the parliament. In fact, it was complete repudiation of the previous regime or previous government. So the current government now has a mandate given to it by the people to get economic growth going again in the country, and this will be requiring them to play nice with foreign investors, to get foreign direct investment back up, to be a haven for capital, to open the door for business. This economic nationalism, I'm not saying that we won't see more of it, but I'm hopeful that the government has learned its lesson and that the people have sent a message by throwing out the previous government and giving an overwhelming majority to the opposition that they want economic growth, that they want cooperation with foreigners, that they want the development of the resources of the country. And when we're talking about the resources in Mongolia, let's be specific. We're talking about a country with a population of 3 million people and with a mineral endowment that is estimated to be around $2 to $3 trillion of untapped resources in the ground. So the Mongolians simply do not have the capital nor the technical expertise to extract all this mineral endowment. So they need foreign direct investment. They need foreign companies to come in. They need the expertise. So they're going to have to change, and I believe they are. They recently, in the last 6 months, have put to bed their dispute with Rio Tinto over the Oyu Tolgoi mine. Rio Tinto is now moving forward with a $5 billion underground expansion. The underground portion of the mine is has the most resources. So we're going to see, that take place over the next 4 to 5 years. $5 trillion, you're figuring, or $5 billion, excuse me, in costs. So you're figuring $1 billion a year in capital investment into the country. And one needs to remember, the economy of Mongolia, the total GDP per year is only $12 to $13 billion. So, what happens if you take $5 billion and stick it into a $12 billion economy? Well, you're going to have asset prices probably rise. You're going to have an economic boom. Am I suggesting we're going to go back to the boom times of 2011 where we had 17% growth? No, but I certainly think that things can turn around sufficiently that investing in Mongolia now will give you a decent return. So now I want to. What does this all mean for Mongolia Growth Group? Well, you have to really understand the dynamic of the Ulaanbaatar real estate market. I mean, Ulaanbaatar was built by the Soviets basically between two mountain ranges. So there's not a lot of room to increase the size of the city like you would see in a lot of other cities. So there's a main street there, Peace Avenue, Seoul Street, the Central Business District. And if you own real estate in those areas, that's prime real estate. And fortunately, Mongolia Growth Group owns quite a bit of real estate in that area, retail establishments, office space. So my expectation is, the thesis is, as the Mongolian economy overall increases, you should see per capita increases in people's spending power, purchasing power. This would attract more high-end retail people. You see an evolution of the retail spaces going from a dumpling shop to a hair salon to eventually a Louis Vuitton, and that's what we've seen in a lot of other countries like Kazakhstan, Qatar, these other places that have had a large mineral endowments. And as the mineral endowment gets exploited and gets developed, the wealth of the country increases, the purchasing power of the people increases, and subsequent to that, you see increases in the real estate market, valuations, rents, etc., etc. So I believe this will translate equally here to Mongolia and also to Mongolia Growth Group. Now, Mongolia Growth Group has basically been in an austerity mode the last year or so. They've really been taking a lot of costs out of their cost structure. They've been cutting costs. They have not been spending. They try not to spend money and ride through this economic downturn and set themselves up for the eventual turnaround in the economy, which I believe is now happening. In the article, I give a link to a website that tracks the sales manager indexes of various countries. And if you follow that link, you will see that the economy basically looks like it may have bottomed right around the first part of this year and has been on a slow uptick since then. I expect this to continue, especially if we see the turnaround in commodities stick, which I believe we will, and the continued efforts of the government to entice more foreign investment into the country, and we've seen that with some recent announcements by Japan and Korea to invest in infrastructure projects into the country. So I think that this is still a kind of a speculative type situation. It's not an investment. It's not certain that the things are going to turn around there. It's not certain that the government's going to make the right decisions. It's not certain that more investment will come into the country. But I think the probabilities are higher that that is going to occur than it won't. And that's what speculation is all about. You're talking about a company that's selling for 40 cents a share. The net asset value of the shares, the book value, if you will, is around $1.30. So you're getting about a 65, 70% discount to the value of the company if you buy it now. And I think that's the risk reward is definitely in your favor. So that's the story behind Mongolia Growth Group. I encourage you to go to Seeking Alpha. You can read more about my thoughts on the company. There are several links in there that are helpful and will help flesh out the idea even more. Thanks for listening, and we'll talk to you soon.